Hello traders, you are welcome to another wonderful session on how to trade forex profitably, the forex market. So today I want to share with you how you can trade other blocks, how to trade other blocks profitably, how you can trade other blocks profitably. So actually, what are other blocks? What are other blocks? I know you must have heard of other blocks. For short, it is called OB, other blocks. All right, another block is an area or zone where there is concentration of large pending orders, where there is actually a concentration of large pending orders waiting to be executed by large financial institutions, hedge funds, and large banks. All right, so an order block is an area or zone where there is a large pending orders waiting to be executed by large financial institutions and hedge funds. All right, so actually institutional traders, they don't actually enter all their positions at once. All right, and they don't actually use a stop loss. So that is to say that if they want to enter a sell position, they enter partly, they enter some positions first, and later on they enter more positions, and their previous position could be in drawdown, and they come back later to mitigate or to fill their pending other orders that are waiting to be filled. All right, so that is how institutional traders trade. So we that are retail traders that are trying to trade like the institutions, all right, we find out their trail, the trail that institutional traders have left behind for us. That helps us, that when we see it on the market, we know their trace, we can trace their movement when institutional traders are involved in a particular market, and we trade in line with their footsteps or the signs that they have, that shows that they are in the market. All right, because they are the large movers of the market. All right, they are the large movers of the market. So now, an order block, as I've said, we have two types of order block. We have bearish order block, which is also known as the supply zone, and the bullish order block, which is also known as the demand zone. I will show you right now. For a bearish order block, price actually, a bearish order block is an order block whereby price is likely to do what? To reverse from. I'll actually depict it for you. Like here now, price bought up to this point and reversed. Okay, the market bought up to a peak at this point and then reversed. This is a bearish order block, because if price should come back to this point again, it is expected that price is supposed to do what? To reverse from here. So that is why it is a bearish order block. Let us mark it. All right, here this is a bearish order block because price came to this peak and reversed. Price came to this peak and reversed. So it is expected that when price comes back again to this zone, it is going to reverse. And you can see that when price came back again to this zone, it actually did reverse. All right, it actually did reverse. So that is an example of a bearish order block. Okay, so it's actually the last candle. You see, price was bullish until this point and sold. So the last candle before the reversal is where you're going to mark. Okay, the last candle, this is the last bullish candle, large green candle before the reversal. That is where you're going to mark as your zone. So you mark it and trace it down to the right, and when price comes back to that point, to that zone, we expect to see a reaction that shows us that the price is going to sell. So that is your example of a bearish order block, or is also known as supply zone. Okay, a bearish order block is also known as supply zone. Okay, demand and supply can also be called bullish order block and bearish order block. All right, so a bearish order block is known as supply zone as well, while a bullish order block is also known as demand zone. So now let me show you an example of a bullish order block. Okay, an example of a bullish order block. I'm looking for a suitable example. Okay, I want to use examples that I see instantly. I didn't actually prepare anyone, so I'm looking for something that I can. Okay, it's like for here now, this is where market came to this point, and from here the market sold down to this point, all the way from here, sold to this point, and it was from here that the market now reversed. This was the last we are going to mark the last bearish candle before the bullish reversal. All right, we're going to mark that zone and extend it to the right. So that will now show us that if price should come back to that zone, price is expected to reverse. Okay, this is will mark the last candle, the last bearish candle before the reversal. All right, the last bearish candle before, we're going to extend it. Okay, so it's expected this is the last bearish candle. We're going to mark it down to the right side before the reversal, before the bullish reversal, and we expect that if price comes back to that zone, it is supposed to buy, reverse as well. It's going to react in a buy direction. So that is actually a demand zone. This is a demand zone or a bullish order block. All right, so this is a bullish order block. All right, so that is actually it. So those are the difference between the order block, the bearish order block, and a bullish order block, or the supply zone and a demand zone. So let us actually mark them both. Let's draw them and let me depict it for you. So the market comes like this. The market does not actually move in a straight line. So the market actually sold down. Okay, the market sold down, and now we see the market do something like this, and then but I'm just trying to draw a demand zone for you. Okay, all right, so this is some sort of demand zone. Okay, this is some sort of demand zone. So we are expecting that when price comes to this zone, when price comes right here, when price comes back here, is going to actually buy. So that is your demand zone. We're expecting that if price comes back to this zone, it's going to actually reverse. So this is your demand zone, or otherwise known as your bullish order block. Okay, so now let me draw the supply zone, a supply zone or a bearish order block for you. Okay, so you can actually see it. All right, so we have something like this. Price makes a higher high and higher low. Okay, price makes a higher high and higher low. Okay, and now got up to a particular point, which is like a peak, and now formed like something like a resting phase, and from there price came down, price sold. So we are going to mark this zone as our supply zone or a bearish order block. And so the expectation is that when price comes back to that zone, it is expected that price will do what? Will now sell. So this is your bearish order block. So this is your bearish order block or your supply zone. I hope this is clear. Okay, that's your bearish order block or your supply zone. You need to know how to identify that. So this is your bullish order block or your demand zone. This is your bullish order block or your demand zone. This is your bullish order block or your demand zone. Why this is your bearish order block or your supply zone. Are you with me? So now I want us to further explain. There are also two ways of trading order blocks. All right, there are two ways of trading order blocks. The first way is called the limit order method. All right, the first way of trading order blocks is the limit order method. What this actually means is this methodology was actually made popular by a man called Sam Dearden. He's an American trader. American trader. I think he lives. He lived at. He was trading from Chicago, I think, but he's an American trader. Okay, so he actually make this method popular. So the method is actually that what you do when you have identified your supply zone, you do what is called, you place your limit order. You limit order right here, and you place your stop loss just right above. Okay, your limit order right at the just at the entrance of into the zone, so that when price you can, when you have placed your limit order, like here in this case, now you're going to sell a sell limit order into this place. So when the price is expected that when price comes back to that zone, your limit order will be triggered, and this is your stop loss. In case price, your limit order was not triggered or was triggered and price continue want to blast through, your stop loss will prevent you from having losses. So it's expected that when price comes to that zone, it's going to do what? Sell. So that is the limit order entry method. Let me show you on the chart. So in this case now, you place your limit order right here, so that when price comes here, it's expected that price is supposed to do what? To sell. It's supposed to sell. So, and your stop loss will be placed just above some few pips above the zone. All right. So now in the bearish setup, in the bullish setup, you place your limit order, your buy limit order, just at the entrance of into the zone, and you place your stop loss behind, or some pips below, beyond the demand zone. All right, your stop loss will be somewhere around here. All right, while your entry, your buy limit order should be here. All right, so this is actually the first way of trading order blocks. All right, or the bullish order, or the bullish or bearish order block, or the supply or demand zone, which is called limit order entry method. This one, you don't actually confirm anything. You just have the hope that when price comes to that zone, it's going to respect the zone. All right, you just have the hope that when price comes to the zone, it's going to respect the zone. But over the years, traders were using this method over the years, but until recently, this method have a lot of some deficiencies. Sometimes it works and sometimes it does not work. So that is why many traders stopped using the limit entry method. Why? The reason is because it fails several times. It fails. Price could actually come to this zone and blast through. Okay, let me show you let's look for an example. Okay, for example, now this is supposed to be a supply zone, right? This is supposed to be a supply zone right here. All right, and you see that price actually came to this zone and blast through before it actually sold. So in this case now, if we had placed a sell limit order here at the entrance, our stop loss would have been triggered. All right, so let's look for another example for the demand zone. For here now, this is a demand zone. This is actually a demand zone, or a bullish order block. If we had placed a sell limit order right at here, in order to expect price to buy, this stop loss would have been hit. Okay, so that is actually the shortfall of this entry method, okay, of the limit order entry method of trading the order blocks or the supply and demand zone. All right, so the second method is called the confirmation entry method. This is actually the more recent entry method, whereby you actually do not place a limit order at the entrance of your zone, supply or demand zone. You actually wait for price. Traders wait for price to come to the zone, and when price have come to the zone, we look for what is called a break in market structure, or rather, we also look for what is called the change of character. Okay, a change of character, and when that happens, we wait for what is called a return to order block. And when we have a return to order block, we enter at the return of the order block. I've made a separate video on this, on how to I've made a video on how to refine your entries. Okay, so I will link it in the description box of this video. All right, that video. So that is the second method. All right, like in this case now, you could see that price came to the zone, broke structure right here, somewhere here. Okay, broke structure somewhere here, and now returned returned to the zone. You actually see this clearly on a lower time frame. Returned to a zone right here, and there was now a sell. Okay, so this is like a confirmation entry method. All right, there was actually price came to the zone, reacted in a way that would want to see by breaking structure. After breaking structure, price returned to the other block that caused the break in market structure, or that caused the change in market and change of character, and now it now sold. So this is the more modern way of trading other blocks or demand and supply zones. Okay, so that is actually it. So but before we wrap up this video, I want to show you there are two types of demand and supply zones. Okay, there are two types of demand and supply zones. Two types of demand and supply zones I want to show you. Okay, the first zone is called the rally based drop supply zone. Rally based drop supply zone. We have two types of supply zone: rally based drop supply zone and drop based drop supply zone. Let me show you I'll sketch the two types now for you, so that you can actually understand what I mean. Okay, here we want to look at the supply zone. Two types of supply zone. You see the price making higher high and higher lows. Okay, and now came to a certain point. Okay, and now price will now form a base. Price will form a base. Like a base is just like a resting point, a resting phase. Okay, a resting phase. Price forms something like this, something in this nature. Okay, so this is the zone before price now sell down. Okay, something like this. Okay, something like this. So this is rally. Price rallied up, formed a base. Rally base drop. Rally base drop. So price rallied up, formed a base and dropped. So this is rally base drop, the supply zone. You can see now we would now expect price to come. We expect price to buy up, return to this zone and now sell. Okay, so this is your rally base drop supply zone. So let me show you. Let's complete the diagram. So price is expected to now buy up, form higher highs and higher lows, buy up, and comes to the zone, and it's expected that price would now do what? Sell. All right, so this is your rally based drop supply zone. Okay, so now the second type of supply zone is called the drop based drop supply zone, which I will show you right now. Drop based drop supply zone. This something like this. Price makes something like this. Price actually, the market is actually in a sell phase. Okay, the market is actually in a sell phase, and now comes okay, comes right to a particular point and forms a resting phase, and forms a resting phase which we actually call the base. Okay, forms a base, and now before price will now do what? We now, okay, let's not use this. Okay, now before price drops. Okay, so this is your drop base drop supply zone. Okay, it's different from this one, which is the rally base drop. So this is actually a drop base drop supply zone. So if we should mark the zone now, so we're expecting that price would actually have to rally up to this point and sell. So we're expecting that price would actually come up to this point, up to the zone, and do what? And sell. Okay, so that is a second type of supply zone. So in a subsequent video, I will help you to understand that most times this type of zone is most times is more has a higher probability of working out. Okay, this the drop based drop supply zone also works, but several times the rally based drop supply zone has a better chance of working from experience. Okay, so just know it now. In subsequent videos I will explain further. So but this is rally based drop supply zone and the rally drop based drop supply zone. All right, so let me show you an example before we move into the demand zones. Okay, like I've also you have the first examples which I showed you there, it was a rally based drop. Okay, like this one, let's see, let's see. Okay, like here now, like here, this is a an example of rally based drop. Okay, price actually came back and actually sold partly. All right, so this is a rally based drop supply zone because price actually rallied up, formed a base and sold, and it came back. Okay, and now also sold. Okay, so now to show you a drop based drop supply zone. Okay, here the market dropped, formed a base and dropped again. So we mark this point. Okay, we mark this point. So price now rallied back into that zone and sold. All right, so the market rallied down, formed a base and sold, another and dropped again. The market dropped, formed a base and dropped. So drop base drop supply zone. So market is expected to now come back to that zone and continue in the sell. All right, so that is that example. So let's show you let's move into the demand zone. So just like this, the reverse of the reverse of this is this demand zone, and the reverse of this one too is also the type of demand zone. Okay, for a demand zone we have drop base rally demand zone. Drop base rally demand zone. Let's get to another section so we can actually draw it so I can draw it for you. Okay, so we have drop base rally demand zone. Drop base rally, the market actually dropped. You know, this I'm using a straight line just to save your time, but you know that the market does not actually move in a straight line. You have it will be forming lower lows and lower highs. Okay, so the market now formed a base, okay, market formed a base and then rallied up. Okay, rallied up, okay, so this is your drop base rally demand zone. So we're expecting that when price comes back into the zone, price is expected to come back to the zone. Okay, forming lower lows and lower highs. Okay, come back to the zone. We're expecting price to come back to the zone, and from that zone we are expected to take a buy trade from that zone. Okay, so this is a drop base rally demand zone, and from here we take a buy trade. If we either use the limit order entry method or the confirmation entry method to take a buy trade. And for the confirmation entry method, I've made a video and on that, and I'm going to link it on the description box of this video. All right, so this is drop base rally demand zone. So the second type of demand zone is the rally base rally, just similar to this one. This is the reverse of the supply zone, the drop base drop. Okay, so for the demand zone we have a rally base rally. Okay, rally base rally. Let me just draw it close today. So we have a rally, market will rally up, forms a base. Market rallies up, forms a base like this. Pardon my sketch, just to help you understand it well. Okay, forms a base, and now rallies up. Market rallies up again, so giving us a demand zone. Okay, giving us a demand zone. So it is expected that price would actually come back. It's expected that price would come back to the zone. It's expected that price would actually come back into the zone. Into the zone. Into the zone, and now buy. Okay, so it's expected that price will come back to the zone and will enter a buy position. All right, so have you seen it? Is it clear to you now? All right, so rally, base, rally, demand zone. So price comes back to the rally, to the base, and we take a buy trade from it. So I will show you an example of the rally, base, rally, demand zone right now. So an example, let's get an example. I'm looking for a suitable example to help you understand this scenario. Okay, so in this case now, this is an example. Okay, this is an example here. Okay, these are examples here, but I'm looking for a more suitable example. Just give me a while. Let me look for an example, a suitable example to describe the rally, base, rally, demand zone. Okay, that actually happens in a bullish trend. Okay, so here now, the market rallied up, formed a base, and continued and rallied up again. So you can see, let me expand it for you. Let's expand it so it will be clear. Where was it just now? Sorry about that. Okay, so the market rallied up, formed a base, which we're going to mark here. Formed the base. The market rallied up, but formed the base and rallied up again. So it's expected that the price will come back to the base and buy, and which market actually did. The market actually just tapped into the base and actually continued and bought. So let's see if we can get another example of the rally, base, rally, demand zone. All right, so an example here too. The market is an example. Another example here. The market rallied up, formed a base, bought, and now the market came back, returned to the other block and bought. So this is also another example. So those are the types of demand zone. All right, those are the types of demand zone. I hope you learned something from this video. Okay, but I've also made more video. I've made a previous video on reasons why your supply and demand zones fail. Okay, so you might be wondering, why do my supply and demand zones fail? Sometimes there are some reasons. I identified several reasons why we are expecting price to respect a particular zone and price did not respect that zone. The reason why your supply and demand zones fail, I made a video on that, and I'm going to link it on the description box of this video as well. Okay, so that you can be able to know, you will look out for those factors and avoid them, so that you have higher probability trades, your demand zones, so that you can have a higher probability trades. I've also, as I told you, I also made a video on confirmation entry, how to find confirmation entry to your demand zones and supply zones or other blocks. All right, I've also made a video on market structure. You need to understand market structure in order to trade supply and demand zones better and profitably. All right, you need to know about market structure. All right, so I will make more videos as time goes on to explain to you better how to select the right supply zones. That are not all, you don't trade from all supply or demand zones. All right, you need to know how to actually select the higher probability supply and demand zones. I'm going to make a separate video about that, because not all zones are higher probability zones. I'm going to make a special video on that, so with time. So please, I want to ask that you please subscribe to these videos, to this channel. If you're yet to subscribe to our channel, subscribe to our channel and share our content with other of your friends who want to become profitable in forex trading. All right, so subscribe to our channel. If you also want to join our free Telegram group, the link to that group is in the description box of this video or the profile section of this YouTube channel. In that free Telegram group, I share setup from time to time, which you can trade at your own discretion. All right, at your own discretion. Also, if you want me to mentor you personally one-on-one on how to trade the forex market successfully, feel free to contact me. You can see my contact also when you join the free Telegram channel. So till I come your way next time, I want to wish you all the best in your trading career, and continue to excel, continue to succeed, and the sky will be your limit. Will not even be your limit. The sky will be your starting point. So thank you so much, and do have a wonderful day. Bye.